Good morning, everyone. As Richard said, and for those of you here who I haven't met yet, my name is Sharon Corbett and I'm the manager of the Financial Markets Policy team at MBIE. Thank you all so much for coming along this morning to engage with us about the upcoming changes for the financial advice industry. So for the next 10 to 15 minutes, I'm going to give, firstly, a really quick overview of the changes that are coming. Secondly, I'll give an update on the bill's progress and where all the other bits of the puzzle are at. I'll briefly cover the government's response to the conduct and culture reviews so that you get a sense of how that fits in and how that might play out over the next year or so. And finally, I'll give you the latest that we know in terms of timing for these changes taking effect. There's three key messages that I'm hoping you will take away from this morning. Firstly, these changes are coming soon. I know that for lots of us here in this room, it feels like it's been a really long journey in terms of developing this new regulatory regime. Plus, there are still a few unknowns. So I'll give you an update today on where those unknowns are at, but I can assure you all that changes are on the way and on track. Secondly, we recognise that all of this change brings significant disruption for you and for your businesses. These changes are aimed at giving consumers confidence in financial advice by holding all advice to the same core standards. And we heard throughout the review that this should ultimately improve things for the financial advice industry too. Thirdly, I recognise that there is a whole lot of uncertainty right now, given that we don't know the final outcome of the government response to the conduct and culture reviews. I wanted to give the clear message that we really do understand the important role that financial advisors play in helping New Zealanders to navigate complex financial decisions, and we understand the important role that commissions play in remunerating you for your hard work. So turning first to what the new regime looks like. So most of you here, I think, will be well aware of these changes, but I wanted to give a quick overview for anyone who's new here today. So the new law has two clear purposes: to improve the quality and availability of financial advice. And unlike the current law, where there are different rules and requirements depending on who's giving the advice, the product that's being advised on, and whether the advice is class or personalised, instead the new regime holds all advice to the same clear standards. So some examples are listed on the right-hand side of the slide. So all advice has to give priorities to the client's interest and comply with a code of conduct. And the aim here is that consumers can be really confident no matter where they go for their financial advice. It also means that as financial advisors, you won't need to spend your time worried about whether you're about to hit up against some arbitrary regulatory barrier, since all financial advice is treated in the same way. I know that many of you now are starting to turn your minds to how you want to structure your businesses in the new regime and to getting a licence. So in the new regime, anyone giving financial advice to a retail client needs to be engaged by a financial advice provider who's licensed by the FMA. I'll leave Derek and John to talk soon from the FMA to talk about licensing in a lot more detail. But I just wanted to make the point here that the law has been very deliberately designed to be flexible so that you can structure your businesses in the way that makes the most sense for you. Just before I go any further, some feedback from the last set of Navigating Regulation Summits was that it wasn't really clear to some of you about the respective roles of everyone who was speaking, I think particularly between MBIE and the FMA. So in short, MBIE advises the government about how the overall regime should look, and that includes advice on what's in the bill. So the bill sets those high-level duties like the duty to comply with a code of conduct and to have a licence. We're also responsible in MBIE for setting the disclosure requirements that will apply and for setting the FMA fees and levies for the new regime. The FMA then is responsible for monitoring compliance once the new regime comes into effect and for licensing financial advice providers. And as part of that licensing piece, they decide on what exactly licensing is going to look like, so what kind of information they're going to ask for as part of the licensing process. The detail in the new Code of Conduct is the responsibility of the Code Working Group, which is an independent group chaired by Angus Dale-Jones, who you'll hear from soon. And we all keep in touch regularly with industry associations, who have a really critical role in helping you all to transition over to the new regime. So moving over to where everything is at. Firstly, the bill. For those of you who watch parliamentary TV, I was tuned into it last night. It is in the final stages of the parliamentary process. So you may have seen just yesterday that some final changes were made to the bill through this process. I want to assure you all that these are largely minor and technical changes, and none of them represent an expansion to what the bill is doing. I was aware that there were some concerns that we might be looking to expand the bill in light of the conduct and culture work. That's not the case. So next up, I want to cover the recent government announcements about fast-tracking consumer protection measures following the FMA and Reserve Bank conduct and culture reviews. I've heard a lot of concerns from people that this might mean a ban on commissions is coming to New Zealand, and I heard a lot of questions about what this means for the FSLAB. So as the Minister said in the video earlier, the primary focus of this new work is about plugging a gap in terms of the regulation of banks and insurers. So for example, a question we're looking at as part of this new work is, should there be a duty on insurers to have greater regard to customer interests when they're actually designing their insurance policies? So whereas the FSLAB is already kind of strengthening the regulation of financial advice, this new work is about asking others in the sector to have responsibility for consumer outcomes too. The upshot of all of that, and as I said earlier, is that the FSLAB will be continuing as it is without any last-minute additions. However, there are clear links to advice, since the government has been really clear that it wants to take a close look at all incentives paid by banks and insurers. They've been really clear that this includes all incentives paid internally, so things like sales targets, bonuses, and leaderboards for frontline staff. What I'm sure is on all of your minds is, what does this mean for commissions? As the Minister said, commissions are a legitimate means of remunerating advisors who do a really great job of finding the best product out of many for their clients. And access to that kind of advice is absolutely critical for New Zealanders who are so often overwhelmed by the financial choices that they face every day. So when we go out and consult, probably in May, on the regulation of financial institutions, we're going to be asking how commission structures work and how we can ensure that the way commissions are paid is aligned with good customer outcomes. And that really includes safeguarding access to financial advice. So finally, I would like to cover timing. So far, everything is running to the anticipated timeframe. As this slide shows, once the Code of Conduct is approved, there'll be a minimum of 9 months before the new regime takes effect. And that includes at least 3 months for you to get your head around all the new details, and then at least 6 months in which you can apply to the FMA for a transitional licence. After that, to enable smooth transition, there's a 2-year window for existing advisors to meet the new competency standards. So at this stage, we expect transitional licensing to open towards the end of this year and for the new regime to take effect in the first half of next year.